Oil prices continued higher this week, albeit with a modest pullback on Friday, but maintained their bullish momentum. We touched just above $60 a barrel. Recall back in January, we're up about about $15 to $16 year to date, but we've really seen the market just explode to the upside. Obviously, they're back in January and February, things looked a little different economically globally than they do today. But we actually we've retraced 50% of the October to December of 2018 sell-off. So right now we kind of hit that resistance right around $59, $60. Market has pulled back slightly. I do anticipate we'll probably see some further selling. Obviously, it becomes now a global growth concern, maybe a China-U.S. concern. And I think that the fact that we've seen production cuts hold in play for this long, I don't know if that's going to be the next step if we want oil prices to ascend beyond $60 at this point, because it's working, but I don't know if they want to continue to add to that. We won't learn that from OPEC for quite some time, but I think right now it becomes a global growth story where we're going to see probably a modest pullback in oil prices from the data we're seeing out of Europe, from the news we got from the Fed this week. And I think that ultimately that we may have hit a real level of resistance right here, right around that 60 level. We did not last very long up there this week, and we did pull back significantly, well over $1 on Friday. So right now we hit a technical resistance level. We'll see what happens next week with the follow through, but ultimately right now I expect a little bit softer prices. And if you look at the dollar has had its ups and downs, and we've talked about it for this year. It's been a very mixed year, but we did end on a high note after seeing the lowest prices print in the dollar index since February. Despite the fact that the Fed came in and really talked about being very dovish and being cautious and patient and probably not raising rates and maybe even possibly cutting rates sometime in the, and it just seemed that the dollar didn't have a real directional bias, and we ended on a strong note this week, and I think that assisted in some of the selling we saw in oil. But I think ultimately right now the dollar is going to remain very volatile. Maybe it'll be positive against a basket of currencies one day and it'll be weaker the next, but I think because the Fed is now on hold, as are all central banks, the Fed will stand out and the dollar should continue to hold its bid. I don't know if we're going to see that straight up trade in the dollar, which means that you could see oil become a little more volatile as well. So right now the dollar higher, but I wouldn't necessarily hang my hat on this is going to be a new trend. And lastly, let's look at the positioning in oil. We've seen speculators get long and longer and longest throughout the years oil prices have ascended. So I think that right now this pullback may have been led by speculators who are looking at this as a technical trade. If we do break down below the next support line, I think that speculators will continue to sell, knowing they can probably buy back at a later date at a lower price, given the fact that growth numbers are looking pretty stagnant, given the fact that there isn't any resolution between the U.S. and China. The only concern they would have would be some kind of geopolitical unforeseen event, which would spike oil prices before they have a chance to jump back in. So right now, speculators, I think, are the sellers at these higher prices looking to buy back lower. I don't necessarily think that it's a trend, but if those growth numbers don't turn around, and if OPEC is forced to cut production levels again, I don't know if they're going to have the same results that they got at the beginning of this year and going back a few years when they originally used that as their way to kind of prop up oil prices. So right now, speculators remain long, maybe not quite as long as they were last week, and oil prices, after hitting a significant resistance level, start to see a little bit of a pullback. Next week, we could see that continue further to the downside, as global growth is very questionable, and the Fed kind of reiterated that with their decision to not raise rates any further.